Nothing on housing? Nobody? The next area, the housing market. So one area that is definitely doesn't have a good outlook right now, and that's a big part of the economy, and it's a big part of GDP is the housing market. And just saw a chart recently that people are very pessimistic about buying right now, and I don't know that it's just extreme pessimism. It's affordability. It's all factors, right? I mean, this is a confidence chart, but I mean, you can't buy if you have your current house and your rate is 3.5, and then you go to buy a new house and the rate's 7.5. I mean, that it really drops your buying power, and so there's a lot of factors that go into this, but housing is definitely something that isn't doing well right now from a transitioning of people selling houses and buying new ones. There's housing development is slow. There's not a lot of new housing starts. I know we have a shortage in supply. We got rates that are up. So a lot of factors negatively affecting housing right now.
I would say there's a trickle down from that too. I've been watching earnings from like Home Depot and Lowe's and a lot of these other companies that benefit from the housing market doing well, and they're all suffering too.
Yeah,
because that's a big driver for the economy.
Nothing on housing? Nobody?
Well, like you said, I think it's a double whammy, right? So you got high rates and then the high prices. So if you're trying to move from one property to the other, you just doubled your interest rate likely, and you're paying a lot more for probably not a whole lot more house either. And so I think that's a double whammy there.
I did see one. Again, I don't have this chart, but I did see the other day that the median house price has just increased so dramatically because we've been such a real estate boom for a long time, and you have the average house price, going way up, and now rates way up. Those are two conflicting, I guess, two forces driving the same direction with a negative impact on housing. Everything's more expensive, and then it's more expensive to borrow money to pay for those.
Well, difference between a 3.5% mortgage, 30-year mortgage, principal and interest on say $500,000 balance is something like $2,200 in your payment. 7.5, which is about where they are now, roughly. You're talking $3,500. So more than 50% higher in your monthly, regular mortgage payment for the exact same place, for the exact same house, and that's rough. There are not a lot of people that can just crank that much extra expenditure into their budget. So that's really, again, this is by design. I'm a believer that the Fed, they know exactly what they're doing, and they're trying to choke the housing prices down too. So all that adds to the inflation.
Well, that's
numbers.
A driver inflation, right?
Yep.
So
all that adds to the inflation number. Yeah, for sure.
Yep.
And the cost of their cost of borrowing, right? The government's cost of borrowing, the cost of benefits when they put raises in for Social Security, they all hinge around that same number. So it's in their very selfish interest to manage that number also. They want to make sure that's going.
What was the COLA adjustment for Social Security? Was it 9 last time?
It was a big number.
It was
exactly
huge.
what it was.
I mean, that's
8.9.
So for everybody, cost of living adjustment in Social Security payments. I mean, if you're the government and you're paying out Social Security payments to however many million, recipients there are of Social Security, and you got to raise those payments by 9%, that's pretty expensive.
Yeah, I think it was 8.7.
Yeah, it's very, very expensive propositions.